All right, welcome once again to my wonderful channel, and I want to appreciate every of my subscribers and your comments. I really do celebrate you, and I want to start a new episode. I want to start a new episode for beginners, for those people that are just learning ICT for the first time, and probably um, um, forex for the first time do well. On this channel, on my channel, you will see I'm going to be putting up a folder. The folder is basically ICT concept for beginners, starting forex afresh for beginners. So you're going to see that folder is going to be packed up with lessons and examples of trades, and sometimes I'm going to be putting some trade executions as an examples. I might just be annotating it, but without audio, just for you to learn. And so this particular episode is this chapter 1 of the episode 1. I'm going to be doing chapter 2 of the same episode, chapter 3. You might get up to chapter 5 of one episode for a start. So ICT concept. Now ICT is authored by a wonderful grand mentor. He calls himself mentors your mentor. So he's my grand mentor, because my real mentors, I have a lot of mentors. I have SK Solomon King and Yen and every other. In fact, I can learn from you, from your comments. So I see you as my mentor as well. So you have ICT concept. So it's actually, this concept is actually found, written and authored by Michael J. Hodderson. So shout out to you at Michael J. Hodderson. So I really recognize you. I really appreciate your work. So this is more like reducing, probably saying in simple terms, some of the things I learned from him and from my mentors. So you have ICT concept for fresh start. ICT concept for fresh start, episode 1. So I'm going to be having your trade setup. What exactly do you look for? What exactly do you look for in your trade setup? What do you see when you see a trade setup? When you see a trade setup, what exactly do you see? What exactly do you see? And so this is exactly what you are going to be expecting. One of these will happen. So what to see and expect in any trade setup: price move in different form, but they don't do that the same time, the same way. They move from time to time. So you have expansion. Is it that the price expands, or it retraces, that's retracement, or it reverse, or it consolidates? So these will locate certain reference points for the next move. So when it expands, it's going to locate certain reference points for the next move. So I'm going to be explaining the movement in a short while. So but before I explain the movement, I just want to quickly show you the chart for you to know, for you to see for you to see how. So I'm going to be using yesterday's trade basically for my examples. Yesterday's trade for my examples. So you have these trades here for yesterday. All this happened today. All this happened today. All right. All this happens today. So now expansion is what I'm about to show you. So I'm going to be showing you expansion. So well, before I show you that, I'm going to be showing you expansion. And yes, yeah, so this is expansion actually. So when you have this, when you have movement up like this, okay, and you have movement down, this is expansion when price expands. And then when it goes down like this is retracement. And when it goes up again, it is expansion. When it goes like this, it is retracement. When it goes up, it is expansion. So this all is expansion, while this is expansion, and this is retracement, and this is retracement. Expand, retrace, expand, retrace, expand, then another retracement. Okay, so quickly, when we have that, the next thing is, well, we'll talk about expansion and retracement at the same time. So when price wants to reverse and consolidate, let me quickly explain that again with the chart. I'm going to be showing you in the chart. So retracement. Now price, we say price is moving up, all right, but when price expands down, okay, let me take this out. Okay, let me take this out. So when price I think I've explained this in one of my videos before, but I just probably want to show you in live charts. Okay, so when you have an expansion and retracement, you have an expansion and retracement move from the downside. You see, this is expansion. The whole of this move down here is expansion, and this one is retracement. This is retracement. This part here is retracement, and there's another expansion to the downside, a little retracement, then an expansion down here. So this expansion. So whenever price expands, it retraces. Retracement is when price returns. So I'm going to be explaining it in a short while. All right, I'm going to explain in a short while. So just want you to know. So like I said here, mark this word I said there. This will locate. All these will locate certain reference point. I'm going to be teaching you the reference point in a while. So this is a straight setup, and now the next is the market efficiency and price. So before we come to this particular again, let me quickly explain to you. You can pause this video and read all this thing that is here in ICT. Okay, in ICT you need to understand that the market moves by algorithm. Okay, market moves by algorithm. This is how the smart money interprets the market. They see it as it is coded. Okay, next is for you to understand the idea of market efficiency. Now, the belief that market will move and must be able to be efficient in both the buying and the selling. So the smart money believe that the market is programmed and is coded, and this reference point and price movement is also coded, but it happens in time. I'm going to be explaining this time in one of my videos. Please don't forget to leave a comment. If you are joining this channel for the first time, make sure you subscribe. So ICT IBDA theory. IBDA simply means interbank price delivery algorithm. It explains how price is delivered. So you need to also know that price movement is not influenced by buying and selling pressure at all. No. It is done by AI. It is coded to act in certain way in time. All right, in certain way in time. All right, so that is IBDA. So this is the delivery. Market expands, and when it expands, it retraces, it reverses, it consolidates. You can go all through this, but I'm going to be putting my focal explanation is this. Let me pick them one after the other. What is expansion? When price moves away quickly from a level of equilibrium, is referred to as price expansion or swing moves. Note that expansion is coupled with ICT tool known as the order block. Okay, quickly let me go back to my chart. ICT tool known as the order block. Let me quickly look at this. Look at this particular one here. Okay, let me quickly drop this tool here. Now look at this particular move down here. This is expansion. Price quickly move from a level of what? Equilibrium. It moves away from this level of consolidation. The whole of this is called consolidation. Everything here, you see, price keeps ranging. This is I'll be talking about consolidation. So it moves away from the level of equilibrium. It moves away and it expands. So this is what we call expansion. So what does price needs to look for in case you're about to buy? Now all these things here, sorry please, now we say that price, whenever price expands, is simply look for what? An order block to buy from. It expands away from this, okay, and it looks for another. But let me look for a perfect example. I think I marked it yesterday. Oh, nice. You see this level here, this is a consolidation. This point here, the whole of these is price was just moving up and down, up and down, up and down. You can see the whole of this market consolidates, and as soon as market consolidates, it returns into, you see, it moves up here and price returns into where? Into the range before it finally does what? Expands. That's exactly what ICT referred to as moment of expansion and consolidation. Yeah, so that's what ICT call moment of consolidation. So let me go back to the slide again for you to see. So when we talk about when price moves away quickly from a level of equilibrium, is referred to, so when price moves away, it comes back to it. Price returns back to it. So it moves away from this point. Let me expand this place very well. okay, it moves away from this level of consolidation and price moves into this is consolidation. So when price consolidates like this, you know that expansion is very, very close. So you pick up your tool and mark this whole area of consolidation. You will notice that the whole of this consolidation, you will notice that at equilibrium there's another block here. Okay, the whole of this here at equilibrium, there's what? There's an order block there. There's an order block. Now, you know, order block, a lot of people have explained that the last close candle, the blah 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 blah. No, the order block is the whole of this down close candle before a move up away from the range. The whole of this is another block. The whole of this, go and find out any ICT video. He didn't just say the last close candle. No, this downward movement is a bullish order block, the whole of it. So you look, the middle of it, price hits the middle of it, and boom, he hits it for the second time, and boom, price moves away from the range. That is what we refer to as expansion. So when price expands like that, it moves away from a level of what? Consolidation or equilibrium. That's expansion. So what is retracement? Retracement is when price moves back into a recently created price range. When this happens, it shows that the smart money wants to reprice the level that was not efficiently traded. So what this particular point is saying is that whenever there's an expansion, there's always a retracement, and whenever there's this retracement, most times when there's an expansion from a consolidation, price actually goes back into the consolidation to pick the order block. But when there's an expansion from just a normal price swing, look at this. I'm trying to look for, okay, look at this expansion, for example. I'm looking for a perfect example. I think I traded this yesterday, so I marked all the, okay, this was the, so when you look at this particular, look at this point here, look at this point here, price expands downward from this height. This is not a full consolidation. Price expand below this low. There's a swing low here, guys. There's a swing low here. So price moves below this low, and what happened? It left a fair value gap. Now, you know, there's what we call a fair value gap. I will explain that. I'll be picking these tools one after the other to explain. But this, a fair value gap, is simply called the inefficiency that price leaves. If you look at this particular, what is the high of this candle? I want you to look at these numbers here. What is the high of this candle? The high of this candle is what? What's the high? The H, 1.09097. Now look at this particular candle here. What is the high? The high is 1.09097. Exactly the same point. This is why ICT called institutional flow entry drill. He does not have the time. He picks it at the buying price. I mean, the high of this and the high of this. He hits it. So most times you enter your trade from here and put your stop loss probably above this high, or sometimes above this fair value gap, depending on whatever that is here. So this is an expansion below this swing low here. There's a swing low here, swing low, and price moves into this what? This fair value gap. That is, and that's what we call retracement into the range. So price retrace into this range over here. All right. So the next is what is okay, I've talked about retracement. And what is reversal? Reversal is when price moves the opposite direction from the current price movement. Let me quickly explain that with my chart. Now if you notice that price has been moving up from this point, price has been moving up price has been moving up from this point, price has been going up here. Now price decides to do what? Price decides to okay, no, yeah, from this point here, let me pick this point over here. Let me pick this particular point here. Okay, look at, there's an upward movement right here. So you see, price, this was the last high price took this last high, and as price took this last high, there's what we call liquidity pool. There's a liquidity here, that's people's stop loss here. As soon as price took this last high, which is the liquidity, price retraced downward. This is another, it breaks down, that's he reverse. This is what we call reversal. We call this market structure shift. This one here is called market structure shift. Market structure shift, MSS, market structure shift, or change of character here. So market breaks down, it breaks all this low here, and what does it do? It locates a fair value gap. Remember I told you, whenever there's a there is a break of structure, or there's a there's an expansion away from a normal high, not a consolidation. Now price goes into a fair value gap in the range. This is a range from this point to this point is a range. So price goes into this range for your change of movement. So you see price moved down, and since then price has been moving down before yesterday's news. That is retracement. That is reversal. So price changed completely from the previous low. So price goes for price simply goes for ICT tool known as the what? Liquidity pool. Liquidity pool resting above where? Hold high and hold low. There's a liquidity pool right here. You see all this high is liquidity, so you have to be very careful where you put your stop loss. I'm going to be teaching you how to put your stop loss and your take profit in this channel. Please do yourself good to subscribe to this channel. Do yourself good to subscribe to this channel. So that exactly is so finally, consolidation. So we've talked about consolidation before. When price consolidates, it simply does what? Price simply consolidates. What is price trying to do? Price moves inside a clear trading range and shows no willingness to move higher or lower to expand from. Price is doing that to indicate that orders are being built by the smart money, okay, to determine the next move. So trade action is just to look for the equilibrium level of that particular consolidation. I showed you an example of consolidation recently. Showed an example of that consolidation, that particular consolidation that I showed you right here. Okay, trying to look for that. Yeah, this point here. So price was consolidating. It doesn't know whether it should go up or down. So price moved away from this consolidation and returned back for 50%, similar to expansion. So that's just it. That's just what you need to look for in trade. I'm going to be making a video on 4 things you need to do not to lose any trade. This is just for new beginners, just to explain the setup for you to know, the setup for you to see whenever you are trading. Whenever you are trading, whenever you see expansion, you should know what is an expansion. Whenever you are trading, you should know what is a retracement and what that retracement is all about. You need to know that when there's a retracement, you should know that you should be looking for a fair value gap. When there's an expansion, price will go back into the expansion. It will go back into the consolidation, and like this one, consolidation, to look for the middle of that consolidation to break out. All right. So that's exactly what I brought for you. So until we meet some other time, have a good trade.